Hey guys, welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist and Master Trader at InTheMoneyStocks.com and VerifiedInvesting.com. All right, so we have some awesome stuff to go over today. Lots of chart action. We saw the Fed minutes yesterday. We'll talk about that in just 1 second. We also had NVDA earnings yesterday after the bell. I actually was trading it live. We have a video later to showcase what was going on. It was wild. The champagne was popped. I had the tequila ready to go just in case it went against me. It was awesome. So look for that video later. It's a wild one. All right, first and foremost, let's get over here. Let's walk on over and take a look at the NVIDIA after hours chart. This was insane, folks. So NVIDIA earnings came out. This is the after hours and pre-market data. Initially, NVIDIA pushed up here, right? It was trading around 508. Then it flushed down to about 468 before recovering and then chopping into the end of last night. This morning, we've seen a bid come in, a little bit of a pullback. We are essentially, get this, trading basically flat. So again, going into this earnings, I think I said this yesterday, I said this could be one of the most important earnings, if not more important than Apple, because it's AI, and it's the sexiest thing in the market right now. USA AI, and you instantly have $1 billion market cap. By the way, verified investing is all AI. All right, there, let's sell it for $1 billion. Now, my point is this, is that was the key, and this, again, very little price action, even though NVIDIA blew away earnings estimates. So what does that tell us? It tells us smart money is starting to say, hey, listen, this is as good as it gets. It doesn't mean it can't go up a little bit more, but ultimately, big money is not rushing into this thing at this valuation, even though earnings were unbelievably spectacular. Okay, so what I want to show you now is the daily chart, because on the daily chart, we talked about levels where this could go, right? So if we look at our parallel lines, we talked about, okay, well, where could this fall? And we looked at this level here on NVIDIA, right? And we drew this parallel here, and we stretched it up in this vicinity, right? So we just did one parallel right through this area right here. And what we saw, if we zoom in on this, is that we basically had, and I apologize you couldn't see it, but here's your parallel. We saw that ultimately what we had was a chart that could fall down right to this line right here, which was also this pivot point right here. And sure enough, the low on NVIDIA, see this pivot top right here and this upsloping channel line? That level happens to be 468. So amazing how on the earnings announcement, when it did flush before it recovered, it came down all the way into that level, and now we are trading back basically around the flat line. Now, the other thing to keep in mind on NVIDIA is, okay, well, how high could this potentially go? And we talked about this yesterday as well. Raise your trend line, right? So if we raise our channel line, number one, we knew we were into resistance based on the channel here, right? Pivot high to pivot high, that's where we were going into earnings. If it continues up, you likely will see a secondary parallel, and that level, I believe it was right here, would bring you to about 525 to 526. So I'm not saying this is going to rally today, but if it does rally, look for resistance around 525 to 526 on NVIDIA. All right, so that's kind of your NVIDIA rundown. The next thing we want to talk about is the Fed and what they said yesterday in the minutes. And in the minutes, guys, basically it was somewhat of a non-event, partially because everyone was just on hold for the NVIDIA earnings after the bell, but also partially the fact that the Fed didn't say anything new. They basically said, yeah, higher for longer. We're data dependent. If the data shows inflation, sure, we'll raise interest rates. If it doesn't, we're not going to do it. It's like, okay, duh. Like, we kind of basically, if we see inflation, we'll have to raise rates. If not, we won't. Simple as that. So it didn't really impact the markets. And what we're seeing today is yields were down a little bit, but we're still staying in this key level on the yields. And again, the way I have talked about this is, I've said this to you multiple times, that the yield is at some significant support, right? We have this area here going across and this upsloping channel line or trend line. So again, as long as we hold about the 4.3 level on yields, right, I would generally say that you look for yields to stabilize here and potentially get a small bounce. Okay, if they do bounce, that may put a little bit of pressure on the markets next week or in the following week. Then we'll have to see once we get into the Christmas holiday period between Christmas and New Year's how things go. But again, it would not shock me to see a small bounce up. I don't think you're going to I honestly don't think we're going back here. I think the highs are in on yields, in my opinion, at least for the next year. Now, if somehow the Fed has to start printing money again, we see the national debt continuing to soar past 35 trillion to 40 trillion, eventually yields will have to go up. But at least for now, at least for the foreseeable future, I think what we're looking for is more of a bounce back here, just in yields in the near term, all right? So again, I'm in that camp for a small bounce as long as we hold 4.3%. Now, if 4.3% dips, your next level is down towards the 4% level right down here, right? So we have this area, we have this area, we have this area. All of this in here, that will be right around 4 to 410 area right over there. Okay. Let's quickly look at the dollar, then we're going to get into some stock market movers this morning. Deere is making a pretty significant drop on the back of earnings. I want to talk about that. But let's take a look at the US dollar. The dollar is finally bouncing. It broke through key support here, fell down, now you're starting to get a bounce. So again, the dollar, in all fairness, would you consider this oversold by a little bit, this straight shot down? I personally would. The question is how much upside is in the dollar, and this is really important here, guys. So if we zoom in on this chart, and by the way, eventually the dollar is going to go lower. That's in the charts already, but it doesn't mean we can't have small bounces. And if we look at a technical basis of where this bounce should run into resistance, what do we know? Here's your level here. We broke down, closed below, and you confirmed the breakdown. All right, the confirmation signal is something I teach in the Winning Trader series. By the way, guys, there is going to be a Black Friday sale on the Winning Trader series. So again, on Friday, look for that. It is an epic discount. If you have ever wanted to have financial independence, this is going to be your chance to do it. So be ready for that, guys. It is going to be, I honestly think it's probably the last time we're doing a sale. We've been talking about it in office, and we're like, listen, everyone does all these junky sales and stuff like that. You know what? We'll do it this time, but basically that's it. So get ready. This is your chance. Buy it for your family, buy it for your friends, buy it for yourself. Change your life. But all right, if we retrace back up, where do you think we'll run into resistance? Really right back around 104.50. Because this is confirmed resistance, it was confirmed, it was support, broke and confirmed. Now this is confirmed resistance. So a bounce in the dollar is not going to get you very much here. Just a little bit of an upside move in the near term. Now granted, if all of a sudden World War III breaks out, knock on wood, that doesn't happen, then obviously the dollar becomes a safe haven. But aside from that, a small bounce in the dollar is all I'm looking for until it does this. And eventually I still think it's going down there. All right. Let's get into some stocks, then we'll get into some commodities and crypto. If we take a look here at Deere, Deere is making a big drop to the downside. Let me bring up my extended hours. Take a look at this drop on Deere. Deere again flushing down to about $350 from yesterday's closing area of around 382. It is getting a little bit of a bounce, but on a technical basis, let's go to the daily chart and see where this could be a tradable play. The only thing I'm seeing, guys, all right, the only thing I'm really seeing is right down here. There's a gap fill. This would be your starter position. Starter position, 346. Pivot low, there's also a gap fill there. That would be your first level of interest. Also, one other little tidbit here, draw a trend line through all of these, right? So here you have the pivot points, and I love this, by the way. I love doing this because I actually didn't see this line ahead of time before I started this, and then my eyes just naturally, and by the way, I want to talk about that briefly. When you're learning trend lines in the beginning, it's hard. There's no doubt about it. Eventually, you get to my level and your eyes just are like, oh, look at that, look at that. Oh, it kind of aligns right through there. Boom, there you get it. So it's just an educational thing. You look at things long enough, your eyes start to naturally draw them before your pencil does. All right, so what do we have here? We have this pivot to here, and to here, and right through. And basically that coexists right there with this double bottom and gap fill. We'll call it 346 approximately. So a dump to 346, I would expect to bounce. If it continues lower, your secondary level is going to be right in here, and that is going to be around 332. So again, I don't necessarily think on a day like today you're going to get through this level, but just be aware that if it breaks that, you could go down a fair amount more. Next up, ADSK. ADSK getting pummeled. Notice initially earnings were released. The stock popped. Now it's getting crushed at 204 after closing yesterday at 216. Let's take a look at the daily chart and see if there's any sort of levels here. The first thing I see is the stock had a big rally going into earnings. I hate that. All right, basically when you have a big rally, the earnings bar is being raised. So think about this. When a stock is down here at the lows, the bar for earnings, right? The bar for earnings is down here. They just have to come in above here for it to go up. As the stock rallies, it's raising expectations. Now here, middle ground, the bar is up here. Now earnings have to be here. By the time you rally straight up from 190 to 220, the bar is literally up here where you have to kind of reach so high to get the stock to continue up. And so essentially probabilities begin to switch. So here, probabilities of a bounce on earnings were pretty high. Now, once you were up here, probabilities of a bounce are 50-50 at best, if not even lower than that. And sure enough, we're seeing the dip here. Now, again, looking at that intraday chart, we're currently trading at 204. The only thing I would have for you guys here is basically back to these lows. If you come back to these lows, it's around 194, 193. On a short-term basis, you might see a bounce on ADSK. All right, so that's kind of a little summary there. Let's step back to center screen here, and I just want to take about 30 seconds, maybe even 15, to just thank NordVPN for being an amazing sponsor of the game plan.
Are you aware that someone could be watching you right now? Consider this. All of your data, your passwords, your entire identity could be exposed at this very moment. The best way to stop this is by using a VPN. NordVPN is more than just protection. It's peace of mind. Their threat protection blocks malware, trackers, and ads, keeping you safe from malicious downloads. Also, no more unwanted sales pitches or spam calls. Your privacy is non-negotiable. Please visit the link in the description and protect your future with NordVPN.
All right, guys, we are back here. Let's jump right over to this screen here. This is the chart of natural gas. You guys know that I am now bullish after talking in these game plans for the last month, waiting patiently for it to come down to this level. I am now bullish. We've seen it chop around a little bit just to look at the levels again for those of you that may be just tuning in on nat gas. We obviously know we had this channel here, this channel trend line, or I shouldn't say channel, but basically a wedge pattern. And then notice again, we broke out. That was awesome. We chopped around and we've now retraced into this level. So I continue to be a buyer here. Granted, I don't go all in. And remember that, guys. This is very important. Never do I go all in on an initial buy. I don't care how good the level is. And you want to know why? Because no matter how good the level is, I have seen them fail. And that's just the essence of it. I don't care if it's an 80% success rate level, it still means 2 times out of every 10, you are going to lose on that. So therefore, I cushion myself. Being a defensive investor is the most important thing you can do. Essentially, once you go all in on a position, you basically have handcuffs on. You can't maneuver. Because I haven't gone all in on this position and I've just started a small position, guess what? If it dumps down here, I can add to that position. And now my dollar cost average is right in the middle here. If it goes down here, I can add again. And now my dollar cost average, eventually you're going to get some sort of bounce. And it's putting yourself in the position to always be within easy shot of making money in a market environment or any sort of asset class. So again, major support here. Probabilities are for a bounce, but if it doesn't plan out, you need to have that maneuverability. Sure, it means that if it bounces right off your level, you may not make as much money as if you had a full position. But to be honest, it's not so much about the money that you make, it's about the money that you don't lose. And that is some wise words right there, guys, that I wish I knew when I was a new trader. And I tell you this honestly, like, you know, the amount of mistakes and amount of things that I'm telling you guys that if I had known when I was a new trader, I would be in a much different position right now. Honestly, it's pretty remarkable. Okay, so let's talk about Bitcoin. Bitcoin had a very interesting day yesterday. We know CZ pleaded guilty. Pretty remarkable with CZ. Now, granted, he didn't steal any client money, so there's a big difference between Sam Bankman-Fried and CZ. But I mean, basically, he made billions and billions of dollars. I think he's paying a $50 million fine, and he might spend, 18 months in jail. And then he gets to go back in 3 years, potentially, to be the CEO again of Binance. To me, that's a slap on the wrist. You know, granted, it's not comparable to what FTX did or some of these other ones. But still, I mean, you know, good for him for figuring it out and working a deal. I mean, he worked a deal. I think partially the regulators didn't want to really crush Binance because it is a huge exchange and could literally have wiped out a lot of cryptocurrencies. But again, I think this is one step closer to a spot ETF. The more the SEC cleans up crypto, the closer it is to them saying, okay, we can have a spot ETF. So if we take a look at Bitcoin here, right, and we flip over to that chart right now, basically what we are seeing, and I'll move over here so we can take a look at this, and I want to zoom in, is we're just still staying within that level, right? So we're still within the channel level that we've been talking about. Now, yesterday we had a big flush, but look at where we stopped. And this is the amazing thing of charts. Like, you know, again, on this news, if you had told me that CZ was going to be pleading guilty and all this stuff ahead of time, I would have been like, oh man, Bitcoin probably going to get, you know, flushed down into this range or something. Instead, it stops right at this level right here, and then we're getting a bounce today. It is staying within the realm of the wedge pattern. So it's still valid. It hasn't broken down. It hasn't broken out. It is just lurking there. And I continue to say, folks, this pattern, I've seen it a lot. The favorability is that it does eventually break out. All right, not by a huge favorable margin, but a favorable probability margin nonetheless. All right, now having said that, I still think the alts are in trouble. And I will say this, guys. When I started shorting the alts with Verified Investing Crypto, which you can get access to at Verified Investing, people were like, oh, it's a new altcoin boom market, and he's going to get crushed. And we just closed out 2 winners yesterday. We've already closed out 2 the previous few days. Last week, we have a bunch in the money. And again, everyone, you know, the crypto community is so passionate, and I love the passion, but it clouds their judgment. And that's where chart reading can enlighten you, is to kind of put you in a position of saying, listen, the chart just tells me. That's it. Like, if the chart is extended into 10 resistance points, probabilities tell me it's just going to have a pullback. It doesn't mean it's going out of business. I mean, I don't think a lot of these, I mean, you know, it doesn't mean any of these are going to go out of business necessarily. It's just that if it goes up 400% and it hits a major pivot top, chances are it's going to pull back. I just take advantage of that. So I just like short, cover. Okay, done. Make money that way too. So many people are so focused on like being like, oh, I can only be long and I just got to love these coins and do whatever. And it's like, okay, that's one way to do it, but don't ever love an investment, folks. You know, second you start to love an investment, you're already dug your own grave, frankly, because an investment will never love you back. My famous saying is only love things that can love you back. Your dog, your wife, your kids, your family, those things you love. Assets that are there, they are for you to make money to supply your family and give your family the life they deserve. That's what they're there for. So just remember that, is that at certain points, you have to be clear-headed enough to say, okay, this has gotten to be enough. At least let me take some off the table. And therefore, if it pulls back or if it collapses, that's fine. Think about some of these things like FTX. Think about some of these things like Terra Luna. if you had just done that or just invested a small amount, a much different outcome would have come. But people fall in love, and this happens in stocks and commodities, and it honestly is a detriment. And I've said this before too, is that gold, you guys know I'm a huge gold bug, but there's a point where I'll sell gold. Like if gold were to go to $5,000 an ounce, here, have it all. And then when it pulls back to 3,000, I'll buy it all again. And then when it goes to here, I'll sell it again. That's the way you have to behave with assets. And remember, they don't love you back, and no CEO loves you back. I promise you. I've heard so many times where like, oh, I love Elon Musk. He's a visionary. Yeah, he's a visionary, no doubt about it. Maybe a little wacky, but he's a visionary nonetheless. But he doesn't sit there and say, oh, Johnny, I love him. I'll make sure to only do things that benefit him to make sure that he's a shareholder that makes money. He's going to do what's right for him and his company, and that's it. That's it, folks. All right, anyways, I digress here. Oil, guys, starting to come down pretty hard. So take a look here, guys, on the oil chart. We did get that little bit of a bounce here on oil, but now it is starting to collapse again. There's a little bit support at 72.50. I am no longer looking to buy that, and I'm going to tell you why. Because you got too close right here. You already got too close. Therefore, I'm going to let it flush through 70, and I've talked about the head and shoulders calculation is around 69, 68 area. We get there, I probably do buy some oil. I will let you guys know in the game plan here when or if I do. Lastly, let's quickly touch on this chart on gold. Gold again, beautiful move. We are now hitting a double top up here. So bear with me here. Right up here, this is a short-term double top. It's not a major double top because it's only a little bit of a pivot, and now it's back up there. So minor double top. Eventually, we might pause here, we might whatever, but eventually we push higher on this, and I still say we're headed back here. I even think by year end, I know it's not a lot of time, basically a month left, maybe 5 weeks left. I still think we could test all-time highs by year end. All right, back to center screen. Here we go, guys. And again, I just want to say this, is that as always, you guys continue to rock my world, and I get driven and excited every single day to do these game plans with you and work with you to become better, to become clear-minded, to become logical, to become everything like that. So I encourage you to keep leaving those wonderful comments you do. Spread the word to friends and family. And as always, folks, I will do my best. I won't be right all the time, but I will do my best to give you the pure data and chart analysis that you're not going to get from a lot of these other news media outlets. I am here to serve you, and I thank you for watching. Take care.